All right, welcome to the bull versus the bear. Today, we are putting NextEra Energy under the microscope. Now, this is a giant in the renewable space, and it's right at the center of this really fierce debate. So the question is simple. Are you a bull or are you a bear?
So the company just dropped its latest earnings. And honestly, they sent some super conflicting signals. On one side, you've got this story of just incredible growth, right? And amazing future potential. But on the other, there are some serious warning signs of trouble ahead. So which story is the real one? Let's dig into the arguments, and we'll start with the bulls.
Okay, so first up, let's build that bull case. The argument here, it's actually pretty simple, but it is powerful. NextEra is basically an unstoppable force in a world that is just desperately hungry for more and more power.
And you know, the company's CEO, John Ketchum, he really framed this perfectly on their latest earnings call. He's convinced that NextEra is in this unique position to lead the charge, building out all the energy infrastructure that's going to power America's future. We're talking everything from data centers all the way to the grid itself.
And look, the Q3 earnings, they seem to back this up in a huge way. The company posted earnings per share of $1.13, which absolutely smashed what analysts were forecasting, by over 15%. Now that is the kind of number that makes investors sit up and really take notice.
And this isn't just a one-off thing, right? The company's adjusted earnings per share, it jumped almost 10%, 9.7% to be exact, compared to the same time last year. What this shows is a real pattern of consistent momentum. This isn't just about getting lucky for one quarter.
So, what's fueling all this growth? Well, it's this powerful pipeline of future projects. For one, they're planning on some really aggressive dividend growth. And that landmark 25-year deal with Google, think about it, that's all about powering the massive data centers that are fueling the AI boom. That is a huge source of future demand. They're even bringing a nuclear plant back online. You add all that to a massive, nearly 30-gigawatt backlog of new renewable energy projects, and yeah, you can start to see why the bulls are so excited.
But, okay, that's only one side of the coin. Let's flip it over and look at the bear case, because it paints a very, very different picture. See, some analysts are looking at this and seeing some pretty significant risks hiding just beneath that shiny surface.
And right here, this is the core conflict for the bears. I mean, yeah, the profits were celebrated, but the company actually failed to meet its revenue targets. This brings up a really crucial question. How can a company be truly thriving if its top-line sales are coming up short? You gotta wonder, is this growth just from being more efficient, or is it a sign of some kind of underlying weakness?
Okay, so if we dig a little deeper, the bears start pointing out some potential red flags. First off, the stock's price-to-earnings multiple is high. We're talking 29.5. Now, for a utility company, that's kind of weird. Investors usually look to utilities for stable, predictable returns, not for the kind of sky-high valuation you'd expect from a tech stock. So for the bears, that's a big warning sign. On top of that, the company is carrying a lot of debt, and its current ratio, well, at 0.54, it suggests they could have some real challenges just covering their short-term bills.
And look, these aren't just numbers on a spreadsheet. They have real-world consequences. Take what's happening in Iowa. A NextEra subsidiary is locked in this big legal battle with the county over its Salt Creek wind project. You've got local officials actively trying to shut down construction. This is just a perfect example of the kind of regulatory and local headaches that can delay projects, jack up the costs, and just add a ton of uncertainty to that whole growth pipeline we were just talking about.
So you've got these really strong arguments on both sides, right? So what do the experts on Wall Street think about all this? Well, turns out they're pretty much just as divided as we are.
If we look at 21 recent analyst ratings, you can see the overall sentiment is, pretty positive. You've got a combined 16 analysts recommending either a buy or a strong buy. But, and this is a big but, look at that hold slice. 5 analysts are just sitting on the sidelines. And while nobody's out there screaming sell, that hesitation, that's a really key part of the bear argument.
And this right here, this spread in price targets, this really tells the whole story. You've got the most pessimistic analyst saying the stock could fall to $77, while the most optimistic one sees it soaring all the way to 98. That huge gap isn't just a small disagreement, It really highlights this deep uncertainty about the company's future and which one of these stories, the bull or the bear, is actually going to win out in the end.
All right, so we've laid out both sides of the argument. On one hand, you've got this super powerful growth story, right? Fueled by a massive demand for energy. But on the other hand, you've got some really serious concerns about its valuation and the risks that might be hiding just under the surface.
So it all comes down to this. What do you believe?
Do you buy into that bull story of unstoppable growth, these amazing visionary projects, and its leadership in a whole new age of power? Or does the bear case, with its high valuation, its financial risks, and those real-world project challenges, does that seem more likely to be what defines the future for NextEra?
Okay, now it's your turn. You've seen all the evidence. So, are you a bull or a bear on NextEra Energy? Drop a comment below and let us know which scenario you think is going to play out. And hey, more importantly, tell us why. We genuinely read every single one.
And hey, if you liked this breakdown, do us a favor and subscribe to the Bull versus the Bear. We've got a bunch of other analyses where we pit the two sides against each other for other big-name stocks. Thanks so much for watching.